Thanks so much for tuning in, and all of us should take a moment to remember the great man, Sri Ratan Tata, as he leaves a legacy behind which will endure and continue. And countless ways to remember him, right? It's maybe a time to celebrate his life for remembering Tetley, Chorus, JLR, or the constant will to revive Air India, launching Nano, and using that famous line, a promise is a promise. There's so much that all of us can learn from his life, his actions, his noble deeds, and beyond everything else. It's about time that India celebrates capitalism as well. And in his case, it was capitalism marked with charity in a meaningful way. But it's just heroes like this who make us realize that great business leaders should be admired as much or more, for they create economic growth, jobs, and more. A salute to Sri Ratan Tata as he leaves behind a legacy which is almost impossible to match. It's a somber day, but we have to do what we have to do, and therefore let's talk about the trade setup today. Remember, we talk about how much Indians are investing overseas, but because India is the cynosure of so many eyes, did you know that an average US investor has less than 1% exposure to India currently? Will this increase via ETFs, via fund flows, via funds? I think that's the key question you're going to ask. Will the mother market remittances to emerging markets and to India increase over time as growth lies here? And therefore think of the kind of growth that can come in as money chases Indian assets. I think that's the big thing to keep in mind. The global news flow is okay, but US markets effectively is the key thing. And the US markets ended higher. The futures currently are flattish. Asia is seeing a bit of a pop because of what the US markets did. The implied open for our markets after completely flattening out yesterday, about 100 odd points. So bear that in mind for our markets perspective as well, that we'll start off marginally higher. The question is, can we build on from there? Remains to be seen. So what's the trade setup therefore for the day-to-day viewers? I think the cool off from highs yesterday shows that maybe the market is skittish on buying highs or chasing higher highs at the current point of time, because the template in the recent past, in a very recent past time, in the last 2 weeks, has been sell every rise. So I think yesterday, which is why we saw a rise coming in, it got sold into a little bit. Can that change? Remains to be seen. When I scan the quant indicators that I usually look at, they are showing that the bottoms are not too far off. So one thing I can definitely say that yes, maybe selling the high is the template that is working beautifully right now, but very large leverage shorts may not necessarily be the best idea, except for select pockets, and I'll mark some of those in moments from now. IT is showing relative strength though, so bear that in mind. And today is a big day because TCS numbers come out. And why do I say today is a big day? Think about it from this perspective. When it comes to TCS numbers, my colleague Rucha will get into details of the exact numbers, but here's what TCS is doing, right? It's trading at what? Approximately 25 times FY27 EPS, which is a very small premium to Infosys currently. Historically, TCS has traded at a very high premium to Infosys. So that's point one. Point two, the 1% odd constant currency growth of Q2, I think is discounted due to the recent underperformance. Look at the last 1 month performance of TCS versus some of the other peers, and that will tell you a story. TCS is down 5.52% in the last 1 month. Infosys is up, Wipro is up, HCL Tech is up, Midcap IT is up. So this one has underperformed. It's not trading at very high premiums. If TCS can manage to show, if not growth in the current quarter, then in the commentary, you might well see this one giving the leg up for IT services. So bear in mind, IT the last 2 days is showing some bit of spunk. Keep an eye out for TCS and for Indian IT as well. And the reason why I said that you got to be careful of being very high short or leverage short, except for select pockets, is this. I think MK Note puts it out beautifully. The sectoral divergence expected in Q2. They are saying that the top line growth for the MK universe is muted at just 3% YOY with near zero PAT growth. However, it's been dragged by cement due to an unusually pronounced seasonality, and energy companies due to a high base. So therefore, energy and cement in Q2 might have a weak quarterly performance. There you might not see some short covering because the numbers will not be doing well. But the other sectors, look at that. MK Universe top line growth 7%, PAT growth of 12.7 or 13%. So therefore, trends for some of the other sectors are very good. Nifty estimates also showed 3% top line contraction and 9% PAT growth. But the point is, ex-BFSI margins might improve a little bit, and specific pockets might do better than the 12.7% average growth. For MK, for some other brokerages, it might be different. But the point being that you might well see some bit of very strong performances as well. And as I said, quant indicators indicate that the bottoms are not too far off. So please bear that in mind if you are going naked short. Result season, while one result came out, the big result season officially kicks off today with this big boy TCS. There's also Tata Elxsi, there is Ireda, Anand Rathi Wealth, Den Networks, GM Breweries. So these are some names that you got to watch out for. What about stocks to watch in the session today? I'll start off with the Adani Enterprises. Standard disclaimer, the Adani Group owns NDTV as well. But the QIP has been launched. They seek to raise $500 million via this qualified institutional placement. It's a 14.2 million shares QIP at an indicative price of 2,962 per share. That's about a 6% discount. But bear in mind, maybe this is just the first tranche, but it's a very small QIP. And therefore, if it gets subscribed well, actually could lead to a bit of an upward movement in the stock price as well. So never mind the discount. Keep an eye out for the subscription details of the Adani Enterprises QIP. May actually turn out to be a well-performing stock today. So watch this one for sure. L&T could be interesting. Cabinet has cleared 80,000 crore defense deals for Predator drones and nuclear submarines. Let's just stick to this line for a moment. The reason why this is important is that because the drones thing is a completely imported thing. The drones are being imported. So I don't think drone companies benefit out of this. But nuclear submarines is the big one. This is as per an ANI report. So the CCS has approved manufacturing of 2 nuclear-powered attack submarines in Vizag. The cost of the project, 45,000 crores, again as per the ANI note. And ANI says that major involvement of private sector firms like L&T is likely here, and which is why I've marked L&T as a stock that you would want to watch. PNC Infratech has been declared an L1 bidder with a partner for an EPC project worth 2090 crores, maybe active today. GR Infra has gotten an LOA for a project worth 904 crores from Maharashtra Metro Rail Corp. Again, could be active today. Star Health has been caught in an eye of a storm. And yes, the companies acknowledge that the company is a victim of a targeted cyber attack and that operations are running as normal. But this is a data breach. Now, will investors punish the stock for this data breach? Could well be the case. I would also watch out, therefore, for some of the allied sectoral themes as well, which rely heavily on consumer data. But I think they may not get punished as much. I don't even know if Star Health gets punished, to be very honest. But if it gets punished, you should know the reason why. The data breach was the major talk of social media yesterday, Star Health's data breach. Zee Entertainment, Independent Investigation Committee submits report to the board, finds no material irregularities. Let's see if there's a bit of a reaction on this. GPTL Hathway, the numbers left a bit to be desired, really. Revenues were up 9.8%, but margins collapsed 12.55% versus 15.95%. PAT down 61% at 13.74 crores versus 35 crores. So GPTL Hathway may see a bit of a negative reaction in the session today. There is a note from Citi on PB Fintech, which is an interesting one too. Excuse me. They've raised the target from 1700 to 1925, and various reasons, of course, that they've put out Citi on PB Fintech. But they, of course, go out to say that the momentum in new business and is strengthening the positioning as well. They have rolled over, of course, from September to September 26 from June 26, so a little bit. And it strengthens PB Fintech's positioning. They capture earnings visibility in higher multiples predominantly and various other reasons. But effectively a target price raise, and that is something you've got to watch out for. So amongst the brokerage notes, I thought this one really stood out for me. I'm sure I've missed out a few, but today was just a day wherein all of us would have just taken a moment to remember the great Ratan Tata. I would like to end this piece again with that. A true visionary, a great leader. India has lost an icon, and It's a loss that will be very difficult to replace. Sincere thanks to the great Sri Ratan Tata.